Good afternoon, Scott Redler, T3 Live. Welcome to today's recap. So when we do the morning note, we try and come up with some catchy phrases to categorize what what the morning news is or whatnot. I feel like today, if I were to write a recap article, it would be like erratic and thin and hard to trust, especially for individual names. And that's what you get over the summer when you're trading, in what are we, the end of July? Well, yeah, right around the end of July. We're in the midst of earnings season. It's a very stock-specific trade. We're trying to figure out what's priced in, what's not priced in, whether or not the market can continue going higher or whether we're going to finally have a little bit of a rest. So there's a little bit of a back and forth type action with not a lot of volume behind it. So it just feels like bids and offers disappear. So you either have to really expand your time frame, or you got to really micro scalp, because if there's no volume attached to a certain price pattern, if it fails at that level, you got to just get out, or you're going to be stuck holding it because it failed at the level and you didn't get out using some tactics. So you look at the chart of the S&P and you'll see we're still stair stepping higher. Here was the low that we got put in on June 24th. Here was your digestion. This is when, if you were a bull or a bear, flat, this was your spot to cover and maybe get in some nice trades, or the leaders out there. Here's when we broke this downtrend that was intact since the 1687. Here is the move up right back to the highs. Then we did some work. Remember the work above 1670 for 4 or 5 days, and then here we are at 1694. So with that said, we're above the 8-day, the 21, the 50. Granted, we're not having breakouts galore and there's not that much interest in the tape, but there's no reason to just have short on the brain. So if you were to look at this very, 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 if I had Darcy here, I'd say how very, he'd say very closely, you could say there's an ascending channel, and as long as we continue to follow to the upside, stay the course. You kind of had that here before you had this, blaring outside day that changed the direction. We haven't had that yet. So with that said, the S&P is just trending higher, and granted, S&P 1700, I don't think people are going to be wearing the hats once we hit it. They'll probably be a little bit pissed off because they don't have enough exposure, or they've been trailing and rolling up a short. But anyway, now you go back to individual names because that's where the individual action has been. One thing that threw some traders off was Google. It goes to show you how you have to do a kind of a level versus a level when you're trying to figure out if a company is going to get a pass or not. And if you look at Google, Google came out with earnings, was down after hours. I think the low, during the day was 875, but I think it was down as low as 860 because I think I remember buying at 870 after hours, and unfortunately I didn't hold on to it. So, right away when you get earnings and it's perceived to be light, first of all, here is that, the channel, so to speak. If you open up on the lows and you fill a big portion of the gap, that tells you get short off the brain. So with that said, you had yesterday's high, which was 902.95, or Friday's high, traded above it, and now here we are. I don't know if we're going to make new highs, right away, but all in all, they gave this stock a pass. So if you were shorting it this entire time, you probably got hurt. If you tried to short it a few times thinking maybe this bounce was a little bit too bouncy, you should have done a level versus a level. I tried it a little bit on Friday, I lost, and I didn't touch it today because I wasn't sure. If anything, technically, once it went above Friday's high, you knew there would be more of a squeeze, and you could have had a nice, cute long trade. So anyway, with that said, Google still looks like, it's in the game. As far as something like Amazon, opened up, went red, getting choppy around here because, a lot of these things are kind of getting hit on earnings. So with that said, it probably needs some time before numbers. So I would just not even trade it. There's some tactical trades in there, but really the time to have been in Amazon, it was when we talked about the relative strength there, when it traded above 272 or across the historic highs at 285. Now it's a little wishy-washy. Same thing with LinkedIn, a little wishy-washy now. You've had this was the last quarter when it was priced for perfection, missed. If you didn't chase it up here, you had some time to get in the base, and now it's right back, made a new high, and a little wishy-washy. You still have a little ways to earnings, and it's above the 8.21, but intraday it's sloppy. So, this was your calculated buy price when it went above this 182 to 184, and now, why would it just run away when you still don't have the report out yet? So just avoid it for a little bit. We talked a little bit about the printing stocks. It's triple D still kind of getting underneath my skin a little bit, as every time I pay for it higher, it hasn't gone yet. So, just, I guess, wait for some kind of real signal with real volume, which we haven't had yet, but it still looks okay. SSYS, I guess you could say that this is actually pretty sloppy. So at this point, it's had a big move. It's still in the game as a new or a new innovative sector, but it's just not ready. I guess it might be ready when earnings happen. That XON was a nice, a good bounce type trade. We talked about selling it here. I remember when I couldn't get any shorts and I was like, Sperling, you have all the shorts. Mike, you have all the shorts. Then boom. And then, it didn't give you that red dog reversal here. It opened and then continued. We talked about a potential little buy spot right there. And, there's your bounce back trade. Now it's going to probably get a little wishy-washy around here. So it goes from a compelling look to a nice trade to, give it time. Same thing happened, if you remember, with Tesla. We talked about first the exhaustion gap, which wound up leading to that Goldman, downgrade, which was that trend down day, and guys made some money short, and then it was like a compelling look for that red dog reversal, where you had that big move from, I think it was like 107 and change back up, and then it gapped up, remember, on I think it was either Thursday-ish, and it was a nice short because of the travel ranges. Then I'm like, let it constrict, and once it constricts, I don't know if it's going to break lower or break higher, shorter term, but you'll see which way it goes. And if you look at Tesla, it was a nice trade off the bat. First of all, this was the trend that wound up holding in there. Okay, here is your exhaustion gap. Okay, then your follow through to the downside once this ascending channel was broken and there was crazy relative weakness there. Then you had your red dog reversal bottom using this as your low, 107.30. Then you had a big bounce. Then you remember right here, I'm like, it's probably worth a cute short. It was. And then it turned into, a constricting type trade where it held the upper end. And then today, some guys on the floor were real quick. We listed 120.55 as a potential buy, went above there, cleared 122.73, and then stalled right there. So another just tactical thing to do. On the 5-minute, you'll see how fast it happened. And, if it was on your radar early and you had a nice plan, okay, you got in there and you were able to take advantage of it. Okay, let's remove this time plit on. Let's go just East Coast so you can see it a little bit better. So here it is. Okay, this was your shooting star top or your exhaustion top, sorry. This is when it broke the trend. Here was your red dog reversal when it overshot, came back up. Then here was that open you could have shorted, which was nice. I remember I made some cash flow there, and then the range got tight, and then this was your buy price. Once it cleared this little 5-minute downtrend, and look at the type of move you could have had. Boom. Nice, clean move. And then I actually got short right around here, made some peanuts, and it wound up coming all the way in, and now it's still sort of, following this little trend from here, where you'll see if it continues. But overall, lots of micro trades in here. Besides, if you are, a macro investor that bought it way back when, and and decided to continue to hold it. So anyway, if you did, you're pretty close to the highs. And if you were shaking in your boots during this 2-day move, it salvaged a little bit of the trade there. But ultimately, there's been very tradable action within the 3, 5, and 15-minute chart here, besides the daily chart, which you had 2 nice entries. Besides the relative strength and the clean move it gave you back here, when the market pulled in and it didn't, and even when it broke into 52-week highs right there. So lots of nice technical action in Tesla, giving electricity to your P&L. Now it's kind of wishy-washy, so we'll revisit that. This PRLB tried to break out and didn't have enough juice. So here's the thing with breakouts. If you're trading, like I'd never really even traded this stock, and guys on the desk were like, oh, look how tight this is. If it gets over 65, it can go. I'm like, okay, it's worth a shot. Went above, 65. And if you were playing for a move to get above 65 and break out and make new highs, that's what you're playing for. If you've been long during this time, tier 1, and you were looking for your add right here, okay, first of all, if you're in from here, you're in your tier 1. If you were playing for an add, once it got above 65, you had a quick little move to 65.90. Not a lot. Maybe you could have trimmed some into that little push. But once it didn't hold 65 or maybe even 64.5, you know what? The breakout wasn't successful. It didn't have enough momentum. So you use a stop and you get back out at that 64.80 area. Okay, so if you were in tier 1, first of all, you should stay in tier 1 until it breaks this. That's your stop there. If you were flatted playing for a breakout, once it went and couldn't hold, you got out of it and say, I got to wait till the next time until it tries again. So the moral of the story there is you have to realize, what you're trading it for. If you're in it, you like the company, you're in a tier 1, waiting for a potential breakout. Then if you're adding for that breakout, if it works, you make extra money. If it doesn't work, you get out. Or if you're just flat playing for that breakout and it doesn't work, and all of a sudden you hold it, now you're in for a little longer term, and you have to, broaden your time horizon out, which still is fine because maybe a few days later it happens. As far as Sperling's play of the day, NDLI, or NDLS, sorry. You know what? It's a very thin, unproven new issue. So to me, like, I wasn't long in coming in, and I didn't really play it. It looked good for a little bit, but you know, it's a thin new issue type of stock that, you know, could have been great, could have been like an XONE and just went, but it didn't. You know, it tried to break above this area, and if you were playing for a breakout above 44 or above 44.99 and it failed, that's your exit. If you've been long in this time, because I know guys in the chat room were talking about buying it around 44. So if you're in it for a tier 1 to be in it, you're still in it because it never, you know, broke this area. But if you were playing it for momentum to get underway, you know, chances are you should have lined up once it failed and then wait, you know, a little bit more time, because again, hasn't been public that long. Sometimes these need time to, you know, continue. If you look at XONE, it was one of those rare new issues that actually did it. You go to the weekly chart. Actually, let's go back to the daily. When it did trigger, it was great. Okay, but let's see how long it took for that to take place. It was kind of similar to this NDLS, where, you know, you had a very successful IPO, which NDLS did have. It had a pullback, so this was your buy the dip, and then this is when it tried to break above, and it wasn't really that clean. This was more clean, and then it still was a little wishy-washy all the way up to the top. But if you look at, you know, once it broke this area, they can't, you know, this was a sloppy mess. But anyway, you know, this took about, what, 6 weeks before it did break this little wedge pattern, which helped put it in motion for a move to, you know, the highs that it reached, which was more than 100% or so above the new issue price. But anyway, just know what you're looking to get into and know your risk. And just because it's a listed strategy, it doesn't have to happen also the day that it's listed. So just be a little careful and take a little accountability. As far as MCP, nice little trade here today with the metals. We've been talking about it. It came to life right around here, right? Remember that trade? And then it's been flagging. Started looking at it last week, and then today wound up being a decently clean trade. Who knows? Maybe it gets a little bit of follow through above this peak and hits this 8 area. As far as the metals, clean move today. Really nice move in some of them. You know, silver we talked about when the blood on the street hit. I remember I was going out to the Hamptons that day, and I said, you know what? You know, if it breaks above this into this gap, it's a buy. And then for some, I'm like, you know what, buying it for a swing. If you're looking to be a swing trader in silver, buy it versus low. And even though this day was a little scary, never broke that low. And now look, it's in 1977, you know, on its way to fill that gap, which gold, you know, already filled. So this is when I think everyone out there started saying the super cycle in the metals and commodities are dead. You know, probably I think into this down move, and now we're a lot higher and people are starting to get excited about it again. Just goes to show you the herd is typically wrong. And this actually filled the gap. So hopefully, if you were, you know, had a long thesis for gold, this was the first true time that it gave you a multi-week trade. For me, every time I felt like I had it when it looked good, I was in a gap down. I think I had it here, and I think I had it there. So I traded it poorly. But if you would have just bought it on this day and said, I'm giving it to the low with your red dog reversal, with buying it at 115.65, you know, with the low at 114.68, you just held it and you closed your eyes, went to work, went to the beach, and you did just fine. So on that, you got to know your time frame. You know, if you're in front of your computer and you try and be perfect, which is not a perfect market, you know, sometimes you'll get hit out. And I think overall had a great trade in silver in the beginning, and then I think I gave it all back trying to time it versus just being in from that day and say, you know what, I'll give it to the lows. Let me see if I can catch this, you know, the blood in the street type trade where everyone hit it out. And it goes to show you that you know, it's hard across the board. So right now Netflix is out with earnings. It was down like 25 bucks, and then it was only down 15 when I walked in. Overall, you know, I would say I'm not trading it. I'm going to wait till tomorrow. You have a level of 244 here. You know, you have another level coming in at 230, and then, you know, if it were to, I don't know how it would do it, but that's your pivot high there. So 240, 230. I think it was down 25 bucks at some point, so maybe it was even down to here, and now it's off, you know, 10, 15. Just know it's wide, it's thin, it's the summer. You know, don't ruin your week or start your week off on a bad foot trying to play this after hours. I think Sperling caught a good trade from down 20 to only down 13. So, you know, if you're on the VTF and the radio, congratulations. Maybe you caught that too. For me, I avoided it because, you know, I just don't feel like on a Monday starting like that. You know, we have Apple tomorrow, which is going to be complicated enough. So anyway, you know, erratic, thin trade, but there's been things to do. SPX, S&Ps just still grinding higher. So if you're just a short there, you know, you're not very happy. You know, if you have 6, 7 longs and you're shorted, then I think you're fine, because if you think about the moves that some of these stocks have had in the past week, some of them 3, 5, 6, 7%, and the spiders might have inched up 0.75%. So it's worth having a little bit of a hedge on in order to let you sleep at night so you could hold your positions. You know, some of these casinos looking good. MGM, you know, holding near highs, above the breakout price that if you guys added here, you know, nice add, it's still holding there, and maybe it goes again. You look at WIN, WINN, you know, it's not a leader, but you know, it's giving you this mid-level base where if it were to break above, it could get going. I guess same thing with LVS. Boom. Okay, now you know what? CCJ. You know, a lot of talk about this this type of stock, this type of play. It's been on people's radars for a long time. I think it started to get going before the tsunami in Japan, and now, you know, it looks like it's starting to get going. There was someone pointed out a huge option buy in the September 23s, holding higher, big time level there. If this were like November, and I was writing my 2014 thesis, I would say look into uranium, look into this company. In my opinion, I think it can get to at least this area, if not higher, if it catches hold. So I put some in my swing account, maybe buy some options and forget about some September or Octobers, and you know, it does look pretty decent. I know it doesn't trade with this USU, but USU, you know, woke up. Somebody put a big order, and something happened here where when, you know, someone was into these uranium plays. So CCJ was supposed to be like the fundamentally rock solid one. You go to your weekly chart, and on the weekly chart, it's just getting up here. So, you know, don't do too much. Maybe tuck it away. As far as like a day one type trade, you see soda on my virtual trade floor. You know, it's been a little battered. It broke right here, and now it seems like it's trying to turn the corner. So I bought a little bit, you know, today, and we'll see if you can get a day two, you know, above today's high, you know, coming to the next few sessions. I know there was talk. Remember that whole soda, you know, Pepsi buyout, whatever. You know, who knows? It you know, perked up today. It's worth something to do if you're holding multiple positions. So all in all, you know, during summer trading, you want to look for things to do. You don't want to put too much excessive risk, but if you're here and you need to make cash flow to put together a month, just be a little bit more selective, have a little less size, and just know whether there's liquidity or not, because when it dries up, you know, sometimes you feel stuck, and don't be stuck, especially when, you know, you don't have to be. Scott Redler, T3 Live, the recap. See you at the morning call tomorrow. Have a great night.
I'm Evan Lazarus, Chief Knowledge Officer for T3Live.com. You don't become a great trader by watching videos and taking courses. You become a great trader through live screen time. Accelerate that learning curve by tapping into the experience of seasoned professionals. Currently, we're offering 5-day free trials to each of our 4 mentoring rooms. In the mentoring rooms, we teach our strategies in the context of the live market. To sign up for a free trial, go to the T3 Live education page, fill out the form, and get started when the next trading session begins. We hope to see you in one of our mentoring rooms.